Did you know that only about 35% of businesses ever make it to year 10? For those of us who want to build long-term businesses that not just make money, but actually generate personal wealth, those are pretty harrying stats. And I know I'm not the only one who wants my business to generate personal wealth, because the stats say that 48% of small business owners, when they start their business, are motivated by generating personal wealth. So if you're one of those people that wants to build not a flash in the pan viral business that is done in a year or maybe 5 years, we need to care about some of the things that might be getting in the way of those businesses who eventually fail. Nearly half of small business owners say that they lacked financial literacy when starting their business. That stat is crazy to me, because it really confirms this truth that wanting to build a profitable business and being ready to build a profitable business are two separate things. And let's be clear, I don't think you don't know this. I think that there are some basic level numbers that most business owners know. We're going to talk about those in the first section, but the second and third section are some more advanced level numbers that I think every small business owner should be tracking, but I don't hear as many people talking about, and I think we could be using them a whole lot more powerfully. And if we haven't met, I'm Samantha. I'm a 2-time small business owner, a little bit of a systems nerd, and I was that girl who was sitting on her dad's lap, looking at investment platforms, learning what those numbers meant. My friends are always asking me for tips on how to negotiate their next job offer, when to set up their Roth IRA. So I think while I am not a financial professional, and please do not take this as one, my lawyer would want me to give you that caveat, I think I have some wisdom to impart as somebody who has used these types of numbers to inform both of my small businesses, and certainly learned some things along the way. So the first set of business owners that every small business owner should know, every business owner of any size should know, are the ones that most of you are probably familiar with, but let's just go through the basics just in case there's some of you who might be a little embarrassed that you're not quite as clear as you wish you would be. So our first and arguably most commonly talked about number is revenue. Revenue refers to the top line dollars in the door. And when you hear that term top line, they're referring to an accounting sheet where the first line is the dollars in the door. So it's literally the top line of that spreadsheet. These are the types of numbers that you see in those videos where business owners are talking about income reports or how much they made in their business. And while it is amazing, and I'm so proud of these business owners, and also so good on them for trying to share and just be more transparent about what it looks like to build businesses, but they can often steer some other business owners into comparisonitis because they see these big numbers, and this is just the top line dollars in the door. The next number that most business owners have some sort of sense of, or if you don't, you definitely should start tracking, is your expenses. These are the cost it takes to deliver and generate that revenue. That can be employees, that can be marketing expenses, that can be a new computer when yours break, but the expenses will be subtracted from your revenue because it's dollars going out the door in order to have dollars coming in the door. And the combination of those numbers is what generates the third basic number that every small business owner should know, which is your profit. Profit is the amount of money left after expenses are subtracted from revenue. It is important to note one little distinction that I hear a lot of people maybe not be so clear on is that business profit is not automatically the dollars in your pocket. So even if you see a business owner who is sharing the numbers of their profit for the month, that doesn't necessarily mean the amount that they are paying themselves, because the business has an amount of profit, but they may be saving that for their emergency fund. They may be deciding to reinvest it into a new software system or a consultant who builds systems to make you more efficient so that it takes less time to deliver on your revenue. Not a subtle plug at all, but hey, can you hate me for trying? When something goes from being business profit to owner profit is when the owner actually decides to take that money out of the business and send it to their bank account. But those three numbers are the basics, and while you absolutely need to be tracking them, they are just the basics in using your numbers in order to figure out how to generate more money, because these are all a snapshot of how things are right now, or probably looking backwards at the last month. When we talk about the next level of numbers that I think every small business owner should know, we're going to talk about some numbers that will help you identify your weaknesses or some of the things that might be holding you back. The first number I think every business owner should know is their monthly reach or impressions. Now, as a former marketing nerd, having worked in an advertising agency and marketing consulting firm, that distinction matters to me of reach versus impressions, but it doesn't necessarily have to matter to you. Reach technically refers to the amount of people that you're reaching, and impressions refers to the number of literal individual instances that somebody saw your content. So reach could be 1 and impressions could be 3 if one person saw 3 different pieces of your content. But for your sake, all that matters is that you pick one and stay consistent with it. And what matters here is that you have a sense of, on a given month, how many people are you getting in front of. I don't see a lot of people who are really aggregating the total amount across their platforms, across their email, across in-person marketing. Having a sense of these numbers gives you a sense of basically just like how many at-bats you're getting. How many opportunities are you having to get your business in front of the right people? There's obviously much more nuance here. We can dig into, are you getting in front of the right people, or the wrong people? But we got to start with just how many people are you getting in front of to begin with. The second number that I think every business owner should know is their conversion rate. If you are a coach or a consultant or some other service provider, I would say to start, the conversion rate you need to know is from when somebody inquires about your services, how many of them buy. That basic division gives you a percentage conversion rate that is super important to inform basically all of your strategy. The important thing of having one core conversion rate number is an ability for you to understand the levers of, oh, if I get more people in, I could expect my revenue to increase by X amount more. Or if I get the same number of people in, but I improve my conversion rate, I could expect my revenue to improve by X number more. Obviously, the more advanced you get, the more you'll be able to break down individual conversion rates from, say, social to your website, from website to an inquiry form, from an inquiry form to an actual close. And ultimately, you can then run a whole calculation of, if I get this many people seeing my content, then I can expect this amount of revenue. I actually ran that calculation once in my last business. I calculated for every view that I had on social, how many converted to my profile, how many then clicked to my website, how many then clicked to a sales page, how many then clicked to a checkout page, and how many then clicked to purchase the product. The number was like 0.008%, something crazy low. But at the end of the day, I did know that if I wanted to create, I think it was like $1,000 per month from these digital products in my business, I was going to have to generate, like, don't quote me on these numbers because this was years ago, 30 million views a month. At least I know the number. The good news is, for high ticket and especially service-based businesses, you don't necessarily need as big a funnel that's going from some crazy big number or whittling all the way down, because conversion rates on higher ticket products do tend to be higher than low ticket sort of product-based products. The third number that I think is really important for every small business owner to know, and especially that helps you identify some weaknesses in your business, is effective hourly rate. Effective hourly rate is important to know even if you don't charge clients hourly. I don't charge clients hourly. My work is done in fixed packages. And yet the effective hourly rate is an important number for every business owner to know, because it gives you a real value of your time. So how do you calculate effective hourly rate? It's very simple. You're going to take your top line revenue and you're going to divide it by the number of hours you work. It takes you 60 hours a week, every week of the month, in order to generate your $20,000 months. You're going to divide those two numbers, and this is your effective hourly rate. A low effective hourly rate means that it's probably time to look at your operations, because you could create more hours for you to bill clients, or, especially if you, like me, price and packages, you could be delivering the same amount of client work in fewer hours of your time, opening up hours to do other things. Or a low effective hourly rate means it might be time to look at pricing so that you can generate more money per that specific amount of time spent. I'll be honest, I think most people don't know these numbers because they don't want to have to confront the reality of their business behind the scenes. It's actually just a little more comfortable to stay in the unknown and do this sort of like hustle culture, try things. Once you know those numbers, you can't hide from the deeper, harder work of fixing in your business. But on the other side, you're going to have very laser focus on whether your problem is in getting in front of enough people, converting people from knowing about your business to buying from your business, or from the amount of hours it takes you to deliver on that revenue, or the amount of money you get from every hour spent. By knowing these three numbers, you are already in an upper echelon of businesses being strategic about what to do next to drive more money in your business. But we haven't even gotten to level 3 yet. This final level of numbers that I want every small business out there to know goes beyond identifying what's wrong or what could maybe be improved in your business right now, and helps you decide things about what you're doing next and where you want to go. The first number of this third section that I think every business owner should know is projected revenue. Now, projected revenue is what it sounds like. It is you projecting not what your revenue is going to be this month that you're currently working in, but what's your revenue going to be next month, and often for business owners, they'll project out months in advance. This can feel like guessing if you don't know some of those earlier numbers that we've walked through. if you don't know the typical conversion rate or the amount of people you're typically getting in front of, it can be really hard to evaluate, what do I realistically think I can make next month? And caveat here, you of course can also project out expenses and profit as well, but for the sake of simplicity, like, let's start with the top line one, and those of you who are ready for that advanced level, it's an easy extrapolation to then do the expenses and profit level calculations here. What's valuable about projecting out your revenue is it requires you to get very clear about the assumptions that you're making of what drives revenue in your business. And by putting those things clearly in your mind and hopefully on paper, you can then evaluate when you're wrong and refine over time. If you think that increasing your output by 50% is going to generate more revenue by that same 50%, and then the next month it doesn't, you know exactly that you need to go be looking at your conversion rate because you're not converting the way you thought, or maybe increasing your marketing output decreased your conversion rate in ways you hadn't realized. When you actually put numbers on the board for your projected revenue, it's going to ask you as a business owner to decide, why do I think that's the number? What pieces go into making that? And then when you're inevitably wrong, some months or others, it's going to have you getting close and looking at your numbers from that month while it's fresh in your mind to determine what about your assumptions was wrong. Over time, I think everybody gets more efficient at doing these calculations. And obviously, it can get more complicated if your business has, for example, a launch cycle where you're not selling at the same rate every month, or you have multiple products that could be affecting each other. But even just doing your best for your first couple months is already going to make you a smarter, more effective, more strategic business owner in deciding what to do moving forward. So I think that projected revenue is one calculation that every advanced business owner who wants to get clear on what are the real drivers in their business so that they can sustain these things over time needs to know that number. And the second number that I think is so powerful for small business owners to be thinking about to decide what you want to be doing next is ROI. Now, ROI, meaning return on investment. If I outlay this amount of money to hire that consultant, to use a video editor, to produce more content, or if I invest my time, which you'll now know how to value because of that effective hourly rate, if I spend this number of hours working on this project, what's the return I expect to get on that? If that number is negative, as in it's going to cost you more than it's going to make you, don't do that thing. If the return on investment is positive, as in you expect it to make you more than you spend, that's certainly something to consider. And if you're deciding between two things, if you could invest the same $10,000 into hiring a consultant who could increase your revenue by the end of the year by $36,000 versus spending your hours manually tweaking your thumbnails on YouTube, which you expect is going to increase your revenue by maybe $11,000, where still positive, but much smaller, those ROI calculations can help you evaluate which is the better decision for you. I think a lot of people are conceptually aware of ROI, but very rarely are they actually asking themselves, what is the real return on this investment? Not just considering the amount of money they're putting in, but also the value of their time being put in to an investment, and then getting very realistic on what they think that they can get back out of it. Once you start to understand ROI, you are evaluating things like increasing your reach or investing in that consultant who says that they can improve your conversion rate. Every decision in your business to address maybe the weaknesses that we identified in that second set of numbers is going to have a very clear way for you to evaluate things on what you realistically think is going to happen. Now, as with all things, and just like projected revenue, these numbers are estimations and you're not likely to get it spot on every time. That's okay. That's part of running a business. You're going to learn and experiment and evolve, and over time, your ability to accurately estimate ROI on investments is going to get better and better, and over time, that's going to lead to you making smarter and smarter investments with greater and greater ROI that can deliver those compounding, improving growth curve numbers that leads to our businesses being those wealth generating engines that we all hope they can be. You don't have to be a financial whiz running complex calculations or complicated spreadsheets in order to be making smart, data-informed decisions about your small business. Once you get dialed in on these 8 numbers, so much of the noise starts to fall away, and you're able to make smart decisions about what efforts are worth your time, where are the key levers you need to be focused on in your business, and over time that allows you to generate more money with less time and certainly less stress, which isn't that all of our goals? And staying focused on those things can lead to more revenue in your pocket than last month, and hopefully with less hours. If you learned something about this video, we would love it if you would give us a subscribe down below. And with that, I'll see you in the next one.